Yes, welcome. This is our weekly analysis session. So, okay. Okay, family, welcome once again on the second session of our analysis. What we're gonna be doing right now, uh, okay. I'm gonna ask. I think. Okay. Come back. Okay. Please type on the chat box if you have any pair that you would like us to look at. Okay. Any pair, but I'm gonna be focusing on the pairs that we were looking at last week, okay? Because I believe last week S was good, but anyway, every week is good because now we are consistent in our trading and in our analysis. So because we analyze every day and because we take action every day, so we see the results of what we're doing every day. So you can just type in the chat box, just type with me any pair that you would like us to look at, and then and obviously we will check it out, okay? Then we can analyze it together so everyone can see what is happening. If you've got any losses of any of the pair, just give me a shout also, okay? So we can we can uh, check them out, okay? Just go if you can hear my voice and can see my screen also, please type I am back. I am back. Okay, because I don't know what's happening. My platform just froze. Email it over my so I'm trying to. I'm not sure if you guys can hear me. Okay, is this thing just froze? Oh, welcome back. Okay, welcome back. Welcome back. Welcome back. Welcome back. Welcome back, guys. Welcome back. Welcome back. Welcome back. Welcome back. Welcome back. Okay, so now what we okay. Please type if you've got any pair, special pair that made you money this week. Please type any pair if you have any pair that us you would like us to analyze, to do analysis on them about whether it was a profit or it was a loss. Okay, whether it was a profit or it was a loss. Um, just give us a heads up. We take a look at that pair, then we'll see why it was a loss and why it was a profit. Okay, because we want to make sure USD TY. Okay, we'll check it out. Trading tech here. That's good. That's good. That's good. That's good. Okay, so only one pair for now, but we need to check it out so far. So which is good. Which is good. Which is good. Which is good. Okay. All right. So remember we shared before on the other. So Euro USD. Okay, perfect. Okay, Euro USD and other pair. Okay. Okay. And then what's the other pair? Okay, let's just do this. Let's first go over the okay, okay, let's do this. Okay, remember when you are analyzing, so you must understand what you are looking for. You are constantly looking for a trade, whether you're going to be buying or you're going to be selling. or you're gonna be standing out, meaning you're just gonna watch the market because the setup is not there. So a setup is one of the instruction or price action that can be seen in the charts, which is MC4 obviously. A setup can be a signal for a market direction. It gives us confidence for entry because of every entry in trading is risky. So we must make sure that we reduce a risk of this loss because we wait for the setup to take place. So we have to wait for the setup to be there before we can take on those trades. So there are many setup that you're looking for, but you can look at the quasi-motor, the fake out, and the bullish and the bearish engulfing. Okay. So these are the different setups. This is a basic one, which is QML, setup. So you can look for this kind of a setup, and this is QML setup, obviously. And then these are the one. Okay, this is a sub zone where you find your demand becomes now supply because the market has broken the level. And then this is support, where support now becomes resistance. Okay, this is a flag limit where the market broke a level. Then now you got a flag there. The market is gonna come back to that flag, and this one is a compression. Okay, so and this is a diamond where you find there was a drop and then there was this base, and the market come back to that base. But our main focus is not on this. Our main focus is on the entry and is on the trade in terms of our stop loss. And okay, let me see. Okay. Our main focus is going to be on the stop loss, the entry, and the risk reward ratios tonight, and obviously doing the analysis. Yeah, that's going to be our focus for tonight's session. So we need to be looking. Oh, okay. Okay, we're going to look at that. All right. Okay, perfect. Okay, so our focus this week is on the risk reward ratio. It's going to be on the lot size. So, like I said before, when you're placing an order, you click here in your order. The reason you're placing an order because you will not make money in Forex without you placing an order. So, our orders come in terms of you are buying or we are selling. When you are selling, we sell at the sell zone. When you buy, we buy at the buy zone, which is the demand zone. So if you take a look at this is Euro USD, that's a pair we are trading. This is our stop loss. You need to always have a stop loss whenever you are trading because trading is risky. And to minimize losses, you place a stop loss. Take profit is where you think the market is going to reach that level. So you put in, that's where you want to take your profits. So this is 0.01, that's there. Those are the different kind of lot sizes. And this here is 0.05, you're making 50 cents. And obviously one lot where you are making $10 or you're losing $10. These are the one, another one that are key this year, 0.10 is where you are making $1 per pip. Okay. So that's the whole thing is explained here. The thing of about lot size. Standard lot is $1 is $10. Mini lot is a volume is $10. You're making $1 per pip. If it's 0.2, it's $2. If it's 0.3, it's $3. If it's 0.5, it is $5. The more your account equal, the more you increase any lot size. But remember, ungavele unyuse just kind of because you are excited. Unyuse after taking 5 take profits or unciphise after taking 5 losses because you want to avoid this issue whereby you've got a positive, let's say you've got a positive pip count, but you got what, a negative. You've got a positive pip count, which means in pips you are positive like this one here, but your account inciphile because of your lot size. So remember, even if your winning ratio is very small, but remember in our strategy, the winning ratio is 7, is 8, is 9, sometimes even 100%. So imagine that even with the 50% winning ratio, if you are using the right risk reward ratio, a risk is where you put your stop loss, a reward is where you put in your take profit. Okay. The risk is just is your stop loss, and the reward is your check profits. This is very important to note. So let's go over the charts. Like we are looking at the, I think we're looking at the goals before we went on a break. It's just gonna take you us about 20 minutes, then we're gonna be done. Okay, let's go over to the gold. What happened to the gold? Let's go over to the gold. That was one of the nice trade we actually had for the couple of weeks. Gold has been very good to us. Okay. Oh, oh, let's do that. Let's do that. Let's do that. So this is gold. This is gold. This is gold. Okay, so gold, remember? Okay, what I was saying with gold is this. This is very important this year. Okay, I'm gonna show you why. This year, this pin come back, drop. Okay, but the most important, the basic thing with this trade, obviously, is that is this thing here. The basic thing, obviously, it's okay. Just log in. Just leave the meeting, then join again. Just leave the meeting, then join again. Okay, leave the meeting and join again. Let me just type leave and join again. Thank you. Okay. Okay, this here is what I call a buy zone. This is a buy zone for what? For gold, right? So, like I keep saying, the important thing is to check. So, if you are going to be, so this is what is okay. Obviously, your other entry will there. That's another entry. Okay, another entry will be here. This point. Another entry will be here. Okay, so those are first entry. Let me just type there so you guys can see. That's number one entry. Okay, that's the first entry for your payment order. Okay, the second entry is here. Okay, second entry for pending order is there. That's number two. Okay, which means where you place your sell limit. Okay, your third entry is here. Okay, at this pin. Okay. See, everything is important in the chart. Okay, so right there. So you draw a line there. Okay, what do you get there? Okay, so this whole zone is a sell zone. This whole zone is a sell zone. Okay, remember you wanna have a smallest sell zone because remember I said you want a sell zone is about maybe possible we're looking at the 30 to 40 pips. Okay, or you can go as far as 15 to 20 pips. Where is a sell zone or a buy zone? Okay, you want this zone here. That's the zone we're talking about, guys. Okay. This zone here, you want this zone to be small. If this zone is small, that means your stop loss obviously is going to be small. Okay, because now you're going to have a stop loss above your zone. Okay, you're going to put your stop loss above your zone. Okay, so you copy that. So you put in your stop loss above your zone. So your stop loss must be there. Okay, then you look at the next demand zone. That's where you put in what? Your take profit. Okay, you put in what? Your take profits into there. Okay, I'm gonna share with you now the secret I was talking about in terms of gold. Okay, I'm gonna share with you guys just now. Okay, I want to show you something. There's gonna be a check profit, and there's gonna be your stop loss. Okay, the smaller the zone, if you can check this out, So let's say this zone here, this is our risk, right? This zone here, we need to check this whole zone. How many pips is that? And then obviously we need to check this point from there to there. Okay, we need to check from there to there. How many pips is that? Okay, because from there to there is what is our reward. That's our reward. Take profits is our reward. Okay, is our reward. And then the stop loss is what we are willing to risk for every trade. So before you can place a trade, you need to make sure you can calculate how much. Remember? Okay. So this is our risk. Okay? This is our risk. We're risking so much because we have risking so much. Okay, and that is our reward. From there to there is our reward. If we sell, you're gonna make this much profit. So how many pips are those? From there to there, how many pips? Let's say it's over 300 pips. Okay, so our reward is 300 pips. Let's write down 300 pips. Okay, so this means our stop loss need to be very small compared to our risk. Okay, from there to there is how many? It's roughly, let's say, 100 pips. So our risk now is 100 pips. So our risk is 100 pips. So now what you need to do is check. Okay, you've got risk 100 pips, but the reward of 300 pips. So what is your risk reward in this case? Your risk reward. So if you risk hundreds, if you risk hundreds to gain 300, so that means your risk reward ratio is 1 is to 3. Okay, it's 1 is to 3, which is a very good one because that means you're risking 100 to gain 300 pips. So if you do this for 5 trades, you're gonna have. So if you let's say you take profits of this trade, let's say you have about 5 take profits. 5 take profits. It's 300 pips. It's gonna be 1,500 pips. Okay. So if you have 5 take profits, it's 300 pips. Let me just show you guys how I get there, because this is about 5 times 300. Okay, so it's give you 1,500. So that's 1,500 pips. 300. Yeah, that's about right. That is about right. Okay. 5 take profits, 300 is about 1,500 pips. Okay. But then if you take losses, 5 losses, 5 losses, 5 losses. So 5 losses on gold is equal to minus 500 pips. Okay. Now, even if you're using the same lot size, if you're using the same lot size here, with the same lot size, same risk reward ratio at 300 pips, risking 100 pips, you will see that even if you're gonna lose 500 pips, but you gain 1,500 pips because you take about 10 trades. So here you'll be left with 1,000 pips. Okay, it's 1,000 pips positive pip count. Okay, so this is going to be 1,000 pips. Okay. positive pip count. Okay. That is if you were using the same lot size. If you're using the same lot size, you will not feel this loss because there's going to be 500 pips, there's going to be 1000, so you're going to have 1000 pip count. Okay, this 1000 pips counts, it depends if you are trading with a $100 account, maybe using this volume here. Okay, I need you guys to do some calculation for me. Okay, those calculations, take this into consider this, do calculate about this, calculate how much profits in dollars now from 1000 pips, how much you've gained, 1500 pips, and then minus a loss of, obviously you need to minus a loss of 500 pips, but you need to check what? You need to check this out. Okay, you need to check this out. Okay, this out. Okay, use this in your calculation. If you've taken about 1000, obviously 1000 pips with the mini lot, 1000 pips in the standard lot, 1000 pips with the macro lot, 1000 pips on the nano lot. Okay, just do that. Calculate. Okay, you need to do some calculation. If you guys got that homework, please write it down. Say I got the homework. If you got the homework, just say I got the homework. It's 100 pips and reward is 300 pips. So what you need to do is calculate the dollar amount. Okay, calculate the dollar amount for 3 different lot sizes. Okay, okay, we will. So that's a homework. Okay, okay, and then obviously you need to use 3 types of risk reward ratio. Okay, so 3 types of risk reward ratio. Okay, so we're gonna look at some charts now. Right. So okay, risk reward ratio. So 1 is 1 to 2. Let me see another one. It can be 1 to 4. Okay, let's go. Okay, and then let's look at the what I was meant to, what I wanted to. Okay, this is, I think this is here. Okay, which here. Let me see. Let's go on the chart. Hey, mute. What was that? All right. Okay. What I meant to say about gold is this. Okay. When you are doing the analysis, okay, when you are doing, just make sure I don't have this in place. Okay, if you got the homework, just write, I got the homework. Okay. If you got the homework, just write in the chat box, I've got the homework. Okay. What I meant to with the gold is this, guys. This is very important. Doing the analysis. Okay. This year, this movement right there is one of the zero floats entry point. Okay, if you got this rally base, okay, this is rally base drop. Okay, so in the rally base drop, you can use this here as your entry. Okay, that's your first entry. You can use that as your entry. Okay, you can use entry point number 1. That's number 1 entry point. Okay, that's number 1 entry point right there. That's number 1. You'll see this more often. Okay, and then that's number 2 entry point. It's number 2 entry point. Okay, that's number 2 entry point. So always Okay, I would give you the ways to calculate a lot size for different account amount, like different equity. Okay, and obviously you said the third one is this one here, this one there. That's the third entry point. So entry point is key because if you enter early, you might be on the drawdown. If you enter late, you might miss this, you might miss a move. Okay. See, if you enter here, if you enter there, let's say you enter here late, your entry point is here. The price went up and it went up. Let's say maybe you enter here, it went up about over 170 pips. That's a huge drawdown before actually dropped. Okay, but if your entry point is here, can you see your drawdown was about 20 pips and then you were up about, let's see, from there to there, over 600 pips. It's very important. Okay, can you hear me? Oh, I wonder why. I wonder why. Oh, sure why. But some guys can hear me. I'm not sure why. Maybe I'm not sure why. I'm not sure why you can hear me. Is only one person is getting like a sound problem or okay, please confirm. Oh, okay. Maybe can you hear me now?
Yeah.
Okay, perfect. Okay. So these are the entry point, okay, regarding this. So your risk is firstly, make sure if you are risking 100 pips, your account can take that hit and you can go on with trading. We don't wanna this is not the time to blow account, it's the time to grow now. We are in the second half of the year, okay? But us, okay, this firstly it was I think USD, what is USD to Y? Let's check it out. Man. Let's see that pair. Where is it? Where is it? Where is it? Where is it? Okay. Some guys are trading these exotic pairs, okay? Let's see. Okay, remember what I said? We're gonna first look at what? We first look at the higher time frame. What are we looking for? Direction, okay? The last week the dollar was a bit weak. So what we here, okay, let's first check the weekly time frame. What is happening there? Okay, the market came back to the zone. Let's look left. So the left side is this. Oh, nice. Okay, we've got this. So now, as you can see, the market is arriving at our buy zone, which is this. What you call this? Bullish engulfing. So this is a base. So market is here. Now it says chart this level. So now it looked like this is what it's gonna do. This is a weekly time frame. It's gonna do this. Okay, it's gonna do this, and then do a further drop. Okay, as you can see, that's the doji. So okay, let's drop down to the daily charts. As you can see this on the daily. So this is our buy zone. That's our buy zone. Okay, buy zone. As you guys can see, this was once resistance level. As you can see, I'm gonna type R. This was once resistance level. Okay, this was once resistance level, and it has now become what? This side. Okay, let's just write it down. Support. Okay, it has become support. So you write S there. Okay, support. So this is a sub zone. Okay. So the market broke a level, clear breakout, then it came back to retest the zone, then continue with going up. Okay. So if you miss this here, you're gonna your entry is gonna be here. Okay. Your entry is here. What do you enter for? Your entry is buy. You enter for buy. So you look for buy entry. Okay. So you're gonna look for buy entry. Okay. We're gonna have a buy entry right there. Okay, what do you do? Remember, like we said before, guys, you're gonna calculate this here, this zone here, same story, this zone. Obviously, since there was a this zone was the market broke this level. Obviously, okay. So if your entry is here, on this here, okay, the entry is also on that pin bar. You're gonna put in. Okay, let me just take this. Ngithathe kanje. Khona nizayibona kahle. Okay. Nangu laphana unokhunjana wakho i-entry yakho kwabha ila entry yakho kwabha ngithi yabo. Khumbula sena i-stop loss iba kephi below. Stop loss iba laphana, okay? So then what you do, you calculate that is about 80 pips or so. 80 pips or so. But where's your take profits? Obviously your take profits need to be this. You're looking left, obviously a take profit is what? Here it's over 400 pips. So what are you risking here? Your risk is what? Your risk it's 90 and your reward is 400. Okay, it's a good risk reward ratio, but make sure your risk is your stop loss, your reward is your take profits. Make sure your account can handle the 90 pips of whatever volume you have used. So you take 90, you calculate the volume to check if you've got 0.09. So 90 pips is about $9 on the smaller lot. If it's 0.10, it's $90. Okay, as 0.10 is $90. So you calculate the pips from with the lot size. You can see if you can handle that loss. And then the next sell zone for this year is right there. So the market obviously looking into it, it's going to come back to this zone and then drop. If you can look closely to this, if you have missed obviously an entry here, the market broke, your next entry point is this one here, looking left. Okay, so your next entry point for this year is this here. Okay, going up. If you've missed the buy entry already, so if you miss this, you can enter like this here. Okay, as you can see, this is left, and then obviously this can be your entry. So your buy entry will be there. Okay, that makes sense. So your buy entry, same story again. You calculate your risk. The buy entry will be there. Okay, so you use this. Right click, take the value, use that for a pending order. Your risk need to be, your stop loss need to be below this line. Okay, so you calculate from there to there, that's your stop loss, and then from there to there, that's going to be your take profit. That's your reward. So your take profits from there to there. Okay, that's for USD tier Y. So if you broke down to a smaller time frame, it's become clear. So as you can see, there's I think if you go to a smaller time frame, oh my God. I very clear cool with smaller time frame. Okay, so now the buy entries here. It's your buy zone. Your buy entries here. Your stop loss below the pin. Below this pin, that's your stop loss. Okay, below the pin. The buy entries there. Place pending order. But the key thing is obviously you need to wait. You need to copy that, then you enter. Okay, that is very important. So obviously nalana, sometimes your entry can be no. Okay, abanye bajaha ungena bese babe-draw down baphenike. It's like uthatha i-trade early ungayike nge-setup yakho, uphenike uyivale kwi-loss imove in your direction bese futhi uyakhala ukuthi yazi ngisheshe ngangena yabo le nto le. So it's something ufuna ukuthi avoid as i-trade. I think another good pair to trade this week was this one here. This thing is a very nice setups. Khumbula le. We gave a signal for this one, Euro NZD. Okay, and if you can look left, you can see okay, is there a message? No message. Okay, if you can see this here, looking left. Okay, let's zoom in. Okay, so you guys can see. This was this week analysis, one of the best trade ideas, because you put this, obviously your buy zone is here. So let's check it out. So that's a buy zone. It's our buy zone. This is our buy zone. So you put a stop loss where it's our buy zone. So buy zone, what do? We enter buy. The entry is equal to buy. Okay. Our entry is buy. Okay. As you guys can see, the market actually dropped to this level here. Okay. But our entry is right there. This one here. So drawdown of how many pips? But 31 pips. Okay, let's look at the market. Our reward here was this one here. Remember this? See this? Our target was here. From there, our target was there. And it actually reached the target. Wow, man. This is good. Okay, let me just check how many pips is that. From there, from our entry, it's about over 320 pips. Just think about it, guys. Our reward. So now you're gonna enter our sell again, right? Our reward was about 320 pips, and our risk was about, I didn't calculate it. I think it's about 40 pips. That's our risk. This was USD. You see that? So our stop loss is this zone here. Okay, 65 pips, not 40 pips. But because looking at the where this chart is presented, obviously it was a good trade. It was a good trade. From there, we enter there, then obviously we put in our take profits. So right now we're expecting this market to reverse. This needs to, and it's already done the reversal because say my favorite point and say what akunikeza ini bekunikeza ini use double model bulls. Obviously from there it's going to drop. Okay, if you miss an entry, obviously you use this thing on the left. You're going to use that on the left, that pin on the left as your entry. Okay, let's pull it down to smaller time frame. As you can see, angithi yabo isihlangana nangu lo pin lengikushoyo kusebenzisa one on the left. Yabo bheka nje idoji ithintile lapha bese ya drop. Okay, so this obviously gonna drop up until is reach angithi yabo like compression. Bheka shaya compression la, shaya compression la. I was expecting ukuthi iqhubeke nokudropa ize ifike la. Okay, that's gonna be it. And you need to calculate from there to there. It's about over 230 pips, and then you can calculate your loss. This is about one stop loss circle. Mongena la stop loss can be not really that much big now because you're using that as an entry point. So it's gonna be from there to there. It's about 40 pips stop loss circle. Okay, 40 pips. You use that. If you miss, you can use that as your entry point. If you're confident enough, you can take it from there. Ngena laphana for sell. Okay, just 2 minutes. Okay. So guys, what I will do is I will share more analysis, but I need you guys to do the homework for me. Okay, you're gonna be doing the homework, and then obviously that's gonna be it. Okay, so that's it in terms of the Euro NZD. Okay, this is Euro NZD. Okay. Leave is clear.